All right, let's get started. Welcome to the Real P&L Trading Show, where I share my real P&L on 4 accounts. And I share my proprietary safe wheel strategy for free. I actually, in those 4 accounts, I run 4 separate systems, so you can see exactly how each account is doing, how each system is doing, because it's defined in each account. Okay, so let's get rolling here. The first thing I'm going to talk about is my earnings edge. But before I get to that, if you can put in the comments that you can hear me okay, the audio, the videos, everything's working okay, let me know. Just to kind of give a little bit of feedback on that. I appreciate it. All right. And let's see here. We're going to get into the earnings edge. And you can see my account right here. If you ever want to see someone's account, I mean, you can look at their activity and positions, but really when you go to their account statement, that's where you really see everything that they've traded and what their P&L is on the year and everything like that. You can see currently I'm in an open position right here, MU. I'm at break even on it, down $4. So this here, I haven't gotten out of this trade, and you can see that it's not really having any effect on the account. Let's take a look at the spreadsheet. So the last trade I did that I closed was Oracle for $820. Since I started trading the new 3.0 update, which is 2025, so it's been 2.5 months approximately, I've got 5 wins, 1 loss. I have an 83% win rate. I don't think that win rate will continue, but my average win is 1102, average loss 516. So I'm doing quite well. And what is the P&L in the account? What is the net liquidation? It is 10,796. 10,796. So let's put that in there. 10,796. Looking at 2025, I'm up 68%. And the market, what is the market doing? It's down today. It's at 566.11. 566.11. Oh, it's down pretty good from last week or the last couple of weeks. The market's actually down 3% this year. Wow. Okay. So in 2022, you can see that the earnings edge outperformed 63% to minus 19% on the S&P. Then in 2023, the EE did earnings edge at 17%, where the market did 24%, so it underperformed. And then last year, the EE did minus 33%, and the S&P 500 did positive 23%. And now in 2025, the earnings edge is up 68% because it's the new 3.0 version. In fact, there might be there's probably going to be a link in the description for the product. I have the cart open right now if you want to get the earnings edge. And there might be a discount available if you're one of the first couple people. And then let's take a look at the overall total. Since 2022, when I started trading the earnings edge, it's up 115%. And the market since the beginning of 2022 is up 23%. So the market hasn't done, what is that? 2 years? Yeah, that's average for the market. Interesting that the market's down 3% this year. Okay, looking at the PL5 Pro, let's take a look at that. And I can't, let's see, oh yeah, PL5 Pro's over here. Let's look at what's going on with that one. That is this account here. This one here, 489.60. 489.60. Okay, 489.60. Let's put that in there. 489.60. 489.60. Okay, so down a little bit from last week, about $4,000. 489.60 in a what? Almost a $500,000 account. Okay, so Looking at the PL5 Pro, you can see that I started trading it on July 19th, 2024. So about 6 months of 2024 is up 15.99%. The S&P 500 in that same time frame was up 6.65%. In 2025, the PL5 Pro is up 2.66%, and the S&P 500 is down 3.31%. So outperforming by about 6% right now. Notice we're in that first leg down. I'm going to show you something here. If I can get the right SPY. Chart. See how we're in that first leg down? We're still drawing down. So I call this the first leg down. So when we're in this first leg down, the PL5 and the PL5 Pro, it kind of goes down with the market, not totally, but a little bit. So we're waiting for that first leg down to kind of come to an end right now. Okay, so let's go to, okay, so this is my account here. Let me get into this one. Let me show you my account for the PL5. Okay, so remember, this PL5 is different than the PL5 Pro. It's designed to outperform the market. It will draw down with the market. Let's see how it's doing. You can see that I started this on July 16th, 2024. Until the end of 2024, it did 10.2%. The market was up 3.94, so it did better than the market there. Let's see how it's doing in 2025. The actual P&L in the account right now, I'm showing it, is 32,835. It's in my Interactive Brokers account, 32,835. So it's down from last week, 32,835. Okay, so the PL5 in 2025 is down 0.7%, almost 1%, not quite 1%. And the S&P 500 is down 3.31%. So it's outperforming by around 2%-ish, over 2%, maybe close to 3, something like that. So it's outperforming by a couple percentages, and that's what it's designed to do. So that's what it's doing now. And you can see my total performance since I started trading the PL5 is up 9.45%, and the S&P 500 is up 0.5%. So the S&P is only up 0.5% from the middle of last year. That's interesting. Okay. So that is the PL5. Let's get into the Safe Wheel. I'm going to go over my Safe Wheel account. This account here would show you the net lick, because I always show the net lick. 5717, 5717. Let's put that in the spreadsheet. 5717, 5717. So it's basically the same as what it was last week. It's up $5. Okay, so with the Safe Wheel, we'll just talk about 2025 for now. It's at 4.32%, the market down 3.31%. So it's outperforming nicely by about 7%, 7.5% this year in 2025. The Safe Wheel is outperforming. Overall totals for the Safe Wheel since 2022, up 4.34%. The market's up 19.19% since the beginning of 2022. Okay, so underperforming here nominally, but remember the risk. I get about half the risk, so you can usually double this number to do a side-by-side comparison. So about 28% versus 19% if you do it based on a risk-adjusted basis. That would be the Safe Wheel. Safe Wheel is doing well this year. Okay, what am I doing with the Safe Wheel? So next I'm going to actually trade. So let's take a look at this account. I'm trading LI. I've got my two hedges. So the first thing I want to do is look at my hedges, right? Is this particular put hedge right here, is it in line? Is it need any adjustments or anything? So there's 3 questions I ask. Number 1, do I own 200 shares? No, because if it paid off, I would sell the 200 shares and sell the hedge and come out ahead, but that's not the case because I don't own 200 shares. Next question is, Am I under 100 days? I will be next week, but I'm not under 100 days. So I'm fine here, barely. And then is this strike close enough to give me the protection I want with LI? So LI is trading at, let's see, let's go in here to the LI is trading at 27.98, 20. So let's take 20 because that's my strike divided by 27.98, and it's 71%. So it's not under 70%. So I'm not going to move the put because it's close enough to give me the protection I want. So that's taken care of. And then I look at my long call. I notice I went way out to the 43, probably because earnings are coming up, I would guess, because to pay only $5, I had to go pretty far out of the money there on Friday. So that's in good shape. And now we just run the traditional wheel at this point. I don't own any shares. I'm not looking to write a covered call. I'm looking to just sell a put out of the money. And I want to get at least 28 cents for it. And I want to do it in the nearest expiration. It expires on Friday. So if I sell a put out of the money here, I want to get at least 28 cents. Well, I can get all the way over here. So I can get the 30. Oh, I'm sorry. Let me look at the puts. So I can go all the way down here to 24.50 and still get more than what I want. In other words, I can still get enough premium at the 24.50 strike. What I like to do is go to where I can get the premium and then go up one. So I'm going to sell the $25 strike. And the reason I do that is it's more conservative, and I'll be a little more conservative. I mean, I could go at the money and make more money here. But because, I mean, just out of the money at the 27.50 and make, $1.26, I could do that. But I'm going to go to the 25 in case the price goes down after earnings. I'll be protected at the $20 mark, and I'll also be assigned at $25. So I'm going to go with the $25. I'm going to do one of these based on my sizing. The mid is 39. So I'm going to sell this put here, and my order filled. So pretty much every trade, except for these little calls, these $5 calls, every trade besides those I've made here live every Monday morning. So you've seen every single trade in this account, and you can see it's outperforming this year. It's outperforming the S&P. Okay, so there's my trade. Nothing more to do here. Let's see if there's any questions or comments. Avery says that my sound is good. Good, I appreciate that. Will says, let's get that like count up as high as Carl's profits this year. Yeah, that'd be nice. Get that account, get the likes up. If you like what I'm doing, sharing my actual net liquidation P&L, sharing my actual account, showing proof of what's happening, whether I'm making money or not, you're going to see it. If you like that, hit the like button because that will help this channel grow. And one of the things I want to also do is influence this industry. And I want all the other people out there selling courses, I want them to share their real P&L and their net liquidation on a consistent basis on their total portfolio. And if you hit the like button, that helps the cause. Leslie Moore says tariffs and a newfound fear of a recession are spooking the markets this year. Yeah, it's kind of going off like 2022, getting that kind of 2022 feeling. Will, hit the like button, subscribe, and hit the notification bell. Thanks, Will. Appreciate that. Because I always forget to say it. Will says the tariff threats are the storm, but Carl's the Bubba Gump shrimp captain this year. Yep. I'm the Bubba Gump shrimp captain, I guess. Out to sea. That's definitely what happened in 2022. The PL5 did around a over 20% return while the market was down 20%. And Will says earnings this week, I'm assuming on LI. Let's take a look. On the 14th, so 4 days from now, what is that, Thursday? Yeah, earnings are coming up. And Will says, I think I'm going to break the rules this week and bank in some huge premium. So you're going to sell closer to the money and take a chance, and you might come out ahead, especially the LI. If you're trading LI and it goes higher, it's nice to collect all that juicy premium. But it could go lower, so I'm going to be more conservative. And you can see what I did. I just went to the 25 put and got some premium for that one. Okay. Will says here, Carl, it's cool to see you run the traditional wheel with the same underlying with maybe a paper account so we can compare it to the safe wheel, especially during a crash. Actually, that's not a bad idea. I never even thought about that. Run the traditional wheel without the hedge, see how it does. Most of the time, I'm going to assume that the wheel is going to outperform because most of the time we're going to be in a bull market. But when we're in a market like this, I'm sure that the safe wheel is going to outperform. But yeah, running it side by side, that's a good idea. I like that idea. And then Will says, forget about that last comment. It just gives Avery more work. True. That's true, because I probably wouldn't do it. I'd have her run it. All right, well, the market's down, huh? Almost 2% today. Interesting. Yeah, my account's not really affected that much when the market goes down. We're in that first leg down, like I said. So during that first leg down, I'm kind of going down a little bit with the market, not quite as much as the market, going down with it. Once that first leg turns, I'm talking about the PL5 and the PL5 Pro. Once that first leg turns, what will happen is the volatility will come in, and then the positions will start hitting more profit. Or let's say that the first leg down stops because we hit a crash, because the market just decides to just drop like crazy and the volatility decides to spike up to 35, 40, 45, then the hedges will kick in and they'll hit profit. So either way, I'm going to come out ahead, and I'm just waiting for this. But the first leg down, as it continues, it'll hit my account a little bit. Yeah, as you saw, it's down a little bit from last week. But I'm waiting for the turn, and it'll happen. Plus, one good thing about the PL5 and the PL5 Pro is that when we get into this grind down type of market, my risk kind of comes off, so that the trade plan automatically takes the risk off as we come into this situation, which is nice too. Because the risk to the PL5 and the PL5 Pro is to the downside. So we take the risk off as it's happening, and then we put on safer trades as we move forward. Okay. And Avery says, LOL. And Will says, I like to sell big premium when the vol gets high and use 25% of the premium to buy more expensive call for the hedge. That's not a bad idea. It's a tweak to the system that I like. It's not really part of the rules or anything, but if you kind of get the rules, I like to say replicate before you iterate, right? So Will's replicated this strategy so much, he understands it so well, now he can iterate it. So that's what I like. I like to see that. That's a good idea. That's a good thing to see. Replicate, then iterate. So your iteration sounds pretty cool because you're taking your risk away, but you're collecting all that big fat premium. And Will says, I like your current rules. Keep it simple. Definitely, on your iterations, if I were to try to add that to the rules, it would really make it all complicated. So yeah, keep it simple. Keep it simple. Okay. I appreciate you guys. And what I like to say in parting is, if the P&L is not real, what else are they trying to conceal? I'll be back next week, and I appreciate you guys. We'll see you.